Hey guys, what's up? This is Francisco with Valorizo Capital, and on today's video we're gonna go through the market update. We're gonna take a look at the indexes, and also we're gonna take a look at one very important chart, which is the UUP, which in this market has had a very strong correlation between equities and the dollar. So we're also gonna take a look at the chart, and then we're gonna take a quick look at the UVXY and the VIX, which I think that they are trying to tell us an important message of what the market is expecting in terms of volatility coming into this month of November. And just a heads up, I continue to be very bullish in this month of November. I think that the action that we have seen in the indexes, despite the action that we have seen in some of the mega caps, including Apple, Amazon, Google, Meta, Netflix, I think that is actually pretty constructive, because given the very high weightings of these stocks that have on the market, the indexes are not exactly breaking down. If we take a look at the QQQ, we will see that it's actually trading near the lows. However, it's not breaking down. And then we can see, we're going to take a look at the IWM, DIA, and the SPY, and we're going to take a look at how constructive are these indexes actually building for this month in November, so that we can have a continuation of the rally that started on the last week of October. So remember guys, that this video is for informational purposes only, and that is based on my personal opinion and is not financial advice. And now that you're here guys, remember to like and subscribe. That way you can support the channel, and that way more people are going to be able to find these videos and use these videos as an asset for their analysis coming into the next week and also into the next month. So let's just start here with the UUP. Let me just grab my drawing tools pretty quickly. And what is pretty important to see in the UUP, and it's something that we were talking about in my Twitter account. Also remember to follow me also my Twitter account at Valorizo Capital, is this very important level right here in the UUP. This level is basically 30. We can call it more exactly 30.06 in the UUP, and is a level that we have been watching for some time. Why is this level important? First of all, I want you to notice something in UUP. You can see that UUP has been making lower highs in a consecutive basis. You can see it right here in this level, right here in all those levels that were marked. And now you can see that what is happening to UUP is that we also make a lower low. So that is kind of a change in the structure of price that we're seeing. And if you have been following this channel for a while now you understand the importance of price structure for our analysis. And when a trend starts to change, it usually just starts by making lower highs and lower lows. And now this level of 30 that we have right here is a very important level, because it was a level that was acting as support that was broken in a considerable fashion. And then we actually had a day in which the market tried to push the UUP up by gapping it up, and then we actually printed what is called an abandoned baby in the price patterns. And now you can see that they brought it back down below 30. This is actually pretty bullish for equities, and it's actually pretty bearish for the UUP. And if we take a look at the other indicators that I use for my analysis, we can take a look at the trend oscillator. That is basically the trend in terms of momentum, volume, and price. You can see that we try to go above that EMA, which is the line on the chart, and you can see that we're below it. So that's actually pretty constructive. And you can see that the squeeze was pointing to the downside. It tried to go above, it tried to start to moving up to the upside again, but now we are rejected back to the downside. If this squeeze happens to fire to the downside, I think that UUP at least is going to come into this 29 level, or probably into this 29.04 level. And in my opinion, that will be a completely change of structure in the UUP. Why do I think that is going to be a complete change of structure? Let's just take a look at the chart. You can see, let me just zoom out here a little bit. You can see the importance of the 50 daily moving average in the UUP. All the way back to when this bear market started back in November 2021. you can see how basically the UUP has been holding this 50 daily moving average for the entire move to the upside. We have had some times when the UUP kind of broke below it, as you can see right here, but then we reclaim it immediately. Even the pullbacks that we had to the 50 daily moving average were reclaimed immediately, and then they were followed by some pretty strong continuation to the upside. That actually is not happening right now, and we have to be present to understand that the market is telling us that there is not the same intensity of buying in the UUP. So the market knows something. The market right now knows something and is actually starting to price in these probably future events or news that we're going to get in the market. At least that's my opinion in how the price and what the price is trying to tell us. So we have just to keep it pretty simple. As long as UUP continues to trade below 30, I think that the structure of this market is starting to change. So if we happen to break the 50 daily in a considerable fashion here, then I think that any rally back to it is going to be another opportunity to short the UUP or get long equities and look actually for more continuation to the downside in UUP. So keep this chart in mind. I think that the structure is changing considerably here, and we can see that we're starting to get rejected by that 200 hourly in the daily chart as well. For any of you guys that have been following my channel for a while, you know that I do have the 200 hourly in my charts. This is actually an hourly moving average, but I plug that moving average into my daily chart because I prefer just to see the price action of a daily chart. That way I don't have too much noise when I'm looking at price patterns. So we're starting to trade below that 200 hourly, and at least in my perspective, whenever we're below that 200 hourly, I'm looking for a continuation to the downside. So this is the first piece, and I actually spent a little bit of time explaining this chart because I think it's a really, really important chart for us to understand. And I think that this chart is looking pretty bearish, which is actually pretty bullish for equities. Now let's move into some of the other ETFs that I want to show you. And let me just open my watch list right here. Let's start here with the SPY. We're going to take a look at the SPY, IWM, and DIA. That way you can see that the price action is actually pretty constructive here. And let me just, these are some alerts that I have because I have a trade going on right now in the SPY. Take a look at this right here. And let me just zoom out here a little bit because I want you to really understand this, because this is really, really important. This is the importance of the 200 hourly and why do I have it in my daily chart. See this right here? And see this right here. This is price, and also see this right here. When price reclaims these 200 hourly, we tend to have really strong moves to the upside. Of course, that in tangent with the squeeze and the trend oscillator, I use everything kind of I use everything as a big composition of my edge. And then we have a really strong move to the upside. Now, looking back here, you can see that we're starting to pull back. The trend oscillator was continued to be positive, but then we lost that 200 hourly. Then the trend oscillator also lost the midline. We had a pretty strong move to the downside, and now look what happens here. In this bounce that we had, we came right into the underside of a 200 hourly in the daily chart. And then the trend oscillator was also coming into resistance at the midline. That's a pretty strong short setup. That was a pretty easy short setup actually. And then of course we got the news, then we got the dump. And then you can see right here that as price was making lower lows, the trend oscillator was already making higher lows. That is a bullish divergence in the indicator and the price. Then of course we had the move, but look here, we move above that 200 hourly, and now we're testing that 200 hourly. So I think that as long as we hold this 200 hourly right here, the path of least resistance in the SPY is going to be a move all the way into this declining 200 daily moving average that we have in our charts. So that's the path that I'm looking as the path of least resistance, just based on price action. Not any news or what is happening with Apple or what is happening with Amazon or any of that. That's just based on the price action that I'm seeing on the S&P 500. So I think that we have to take that in consideration. And of course, if you want to take it a little bit further, you can see that also the trend oscillator is testing support. So I think that's also a pretty interesting and good thing to see. So my expectation in the SPY is that we're going to see continuation to the downside, and we have to keep it pretty simple. Any break below this low right here is going to be a change in that thesis. So as for the SPY, now let's take a look at the IWM. And this is beautiful in the IWM. You can see the same thing. You can see how many times here we tested the underside of an hourly 200. Here we tested that declining 200 hourly again. Here we tried to go above a declining 200 hourly again. We got rejected. But then we had the divergence as well. Lower lows in the price, and a higher lows in the trend oscillator. And now you can see that the 200 hourly is starting to curl to the upside, same as happened right here. And what is most interesting is that the trend oscillator is keeping above that 50 midline. That's actually pretty bullish. And you can see that the price right here tried to go below that 177.29 level of demand, and then we reclaim it immediately. That means that for now, this is a bear trap. And what happens with bear trap is that whoever shorted that move is going to be trapped. And I'm going to be looking for a move all the way to 189.67 to close this gap right here. That at least is the move that I'm looking in the short term in the IWM. But this is looking pretty constructive as well. And then let's take a look at the DIA. And the DIA is actually pretty interesting because you can see right here, right? The last time, and let's just take a look at here for a second. The last times that we actually tested that decline in 200 daily was here and was right here. What happened when we did that? We were rejected immediately. You can see just the next candle. The next candle broke a structure completely, and then we moved to the downside. Right here, we had a pullback all the way back. Right, in just 3 days, we went all the way back to that rising 200 hourly. And then we broke it, and then we had a move to the downside. Now what is happening? Now we tested. Now we're testing that declining, but what happened? We got rejected, but now we're testing it back again. At least for me, that's an indication that buyers are being more aggressive. And we just have to keep it pretty simple. As long as the DIA continues to trade in a box right here, and let me just erase that arrow. As long as the DIA continues to trade in a box right here, for me, that's just consolidation for a possible continuation to the upside to close this gap right here, or at least test these highs all the way to 340.58. That's going to be the levels that I'm going to be watching. And of course, you can see that the 21 exponential is starting to catch up with price. And you can see that the trend oscillator, we got a buy signal with a squeeze. And now we continue to hold above 50. It's looking pretty bullish to me. And I wouldn't short DIA just because someone might say that it is too high. At least not for now. We're gonna need a little bit more of confirmation of what the market actually wants to do. And then finally, let's take a look at the QQQs. And the QQQs are a deception, given that they have more weighting on the big tech names. And you can see that the QQQs are a different story, right? The QQQs are below a decline in 200 hourly, a decline in 50, and we're below 272, which is a very important level. However, they're not breaking down, right? Because if we take a look at names like, if we just scroll pretty quickly, take a look at Apple, we can see that Apple breaking lower in a considerable fashion. We can take a look at Amazon as well, is also breaking down in a considerable fashion, but that is not weighting down the QQQ. And I think that is actually a pretty important distinction that we have to make. Those names are making lower, they're making new 52-week lows, but the market is not making 52-week lows, even though we have a very strong weighting of those indexes, of those names in this index. So is this maybe a head and shoulders bottoming pattern? I have to give it the benefit of the doubt, given that the SPY, the IWM, and the DIA are continuing to hold it. So that's going to be my take for this. And then finally, let's take a look at the VIX, which I think is a very important chart here. And we were talking about this in the Twitter community, back at my Twitter account. Below 25.55, I think the VIX is going to test 20. we just have to keep it pretty simple, right? We just have to keep it pretty simple. 25.55 was a previous level of support, and now support is coming all the way to 20, where we have a gap to fill in the VIX. We just have to keep it pretty simple. As long as we're below 25.55, I'm looking for a continuation to the downside in the VIX. That means that I'm looking for continuation to the upside in the indexes. And you can see right here that even though we have a lot of volatility in those mega caps, the VIX was rejected below this 200 daily and it wasn't able to go above it. And now we're starting to get that rejection. So looking pretty bullish to me in terms of the equities, VIX, and a squeeze that is pointing to the downside, trend oscillator pointing to the downside, bearish crosses in all the moving averages in the short term. This one is looking bearish. Therefore, the indexes are looking bullish in my opinion. And one thing that I want to show you, for anyone who's not familiar with this ticker right here, this is basically the interest rates measured by Bank of America, and I use the same indicators in everything. You can see that I have the trend oscillator here, and I just have the Nasdaq Composite on the right here below it. And you can see that when we have these breaks, right, when the interest rates start to trend below that EMA in the trend oscillator, we get these really strong moves to the upside in the indexes. And that's exactly what is starting to happen. We're starting to see that those interest rates are starting to trend below that EMA. We want to see that break below that midline, and I think that's going to be pretty bullish for a possible continuation in the Nasdaq Composite. So that's what I'm watching, guys. I think that we just have to keep it pretty simple. I'm using the SPY as my my guiding pattern, chart pattern right now, and as long as we continue to hold these levels right here, which is somewhere around 370, I think that we're probably looking for more upside, and the target is going to be that declining 200 daily moving average. So once again, that's everything that I have for you. Let me see that my watch list is complete. Yeah, it is. Just keep it pretty simple, guys. As long as the SPY continues to be above 370, I think that we could see a little bit of a push to the upside. Of course, remember that next week we have the CPI numbers, which I consider is going to be a big catalyst for the market. But I have found that if you just follow the price patterns, you're going to be pretty fine when those news events actually hit the market, because I have found that the market usually kind of already prices in all of the news, and I don't think they're actually news. I think that they already know what the numbers are going to be. That's just my take on it, guys. I'm pretty sure that the information was pretty helpful, and remember once again to like and subscribe in my YouTube channel and also on my Twitter account. And thank you so much, guys, for watching. Have an amazing weekend, and I see you on the next one. Bye bye. Peace.